fact, having spoken with my wife last night, we live in the Bay Area, sunny California. It's in the low 50s, rainy, wintry, blistering, and I've been carrying around this overcoat through the Midwest with no opportunity to wear it. In all honesty, it is a great privilege for me to be here. I'm taken by the opportunity to speak any time after IRS mails out its Farm 1040 kit, usually around Christmas, to ruin it. And between April 15th, when your attention on taxes is focused, usually April 16th, the audience sends out a considerable amount. So this is a good opportunity for me to try and persuade you there's a better way. And those postcards are left there either in case you haven't filed your 82 return, and it's still time to do it, but I'm not going to warrant the IRS will take those forms, or cross out the 82, write in 83, and upgrade the personal allowances by the cost of living, and you can do that too. As a last resort, simply turn the postcard over, send in a check, and buy a copy of the book. I do want to say one word about budget deficits before I get into taxes. Deficits. It's all over the landscape. I think you need to know something about deficits, and that is that lecturing congressmen on the evils of deficit financing as a means of bringing out a balanced budget is very much akin to lecturing rats on the benefits of proper hygiene in order to eliminate plague. Now, no similarity between the two sets of actors is intended. I'm going to try and leave as much time as I can for questions, because doubtless you're going to want to know how any particular flat tax proposal or other proposal is going to increase your tax liability. You're perfectly sure you want to keep all the benefits you now have, and that the only purpose of tax reform is to further increase those particular benefits. So I want to begin basically by telling you what's wrong with the U.S. income tax, because if you forgot since last April 15th, you need to be reminded. In the first case, and in the first instance, the tax code is way too complex. There is something on the order of hundreds of forms. Your standard 1040 kit has about 17 schedules and thousands of pages of instruction. The booklet you got, remember, was about 50 to 60 pages, multiple column, single space, finely printed booklet. But at the back was an order form for another 30 or 40 schedules and instructions, with a little blank section for those myriad other ones that weren't sufficient. You should note that in the last 30 years, the proportion of the American people who have gone to seek commercial tax service has increased from 15% to about 55%. And by the way, even Ralph Nader, with whom I don't always agree, discovered in his survey of tax preparation forms and IRS officers that no 2 out of any 8 could agree on the application of the tax law to people's personal situations. A colleague of mine this year at the Hoover Institution has discovered that I have grossly underestimated how much money people spend filling out their tax forms. I conservatively thought it was a rather huge sum of $10 billion. Now I've been put in my place. Filling out the forms and going to H&R Block costs the American economy between $20 to $30 billion a year. And I'm not counting the money spent on shelters. And I'm not counting the distortions introduced into the economy. I'm simply talking about your time and your money to simply send the forms in, not counting the money you send in with the form. Approximately 1/3 of the IRS budget goes solely for the task of counting up those numbers and making sure they're right. By the way, you'll be happy to know that while the President has proposed reducing federal spending, they've managed to get another $1 billion for the IRS, including at least 1,000 more enforcement agents for next year. So those of you who were troubled by conscience had better remain troubled by conscience. To go further, our tax code is so inefficient that it's inconceivable we could have sat down, designed it from scratch, and produced what we now have. We have a GNP, a gross national product, of $3 trillion, and we exempt over half of it from taxes. We do that deliberately so as to tax the others at rates ranging anywhere from 11 to about 70%. We have an underground economy which is estimated to have tripled in the last 20 years, which now exceeds well over $300 billion. We have the IRS telling us that taxes owed to the government by people who don't report them or don't pay them is now in excess of $100 billion a year. And if you take the luxury of adding up the total amount of what the Treasury euphemistically calls the legal sector tax gap of people cheating, It comes between 1971 and 1981 to $507 billion. And during those 11 years, the overall total federal deficit was $370 billion. So if the tax code had done its job, we'd be running these monumental budget surpluses. The national debt would have shrunk from $400 billion to $270 billion. We'd have virtually paid it off. Interest rates would be about 5%, instead of facing in the next few years a $2 trillion national debt. The single largest growth industry in the United States, if you hadn't noticed, is tax shelters. Accountants, lawyers, and sellers of tax shelters make up about 500,000 of the brightest, investment, smartest of people in this country doing nothing but servicing 10 million other people who have discovered that if you save $1 in taxes, you put $1 in your pocket. But if you earn $1 in income, you put 50 cents in your pocket. We have a tax rate system today in place which is intended to tax middle-income people at rates only millionaires paid 20 years ago. In 1961, under John F. Kennedy, we don't often think of him as a leader in tax policy, 88% of the American people paid a flat marginal rate between 20 and 22%. 11% paid a rate between 22 and 31%, and less than a fraction of a percent paid a marginal rate over 31%. 5% of the population now pays a marginal rate of about 50%. 30% of the population pays marginal rates over 30%. And we have fundamentally taken the entire middle class of the United States and taxed it at a rate that only 20 years ago, most of us can remember 20 years ago, applied literally only to millionaires. Thanks to inflation, we pushed everyone up through bracket creep into these high brackets. Let me tell you one or two other problems with the tax system. I'm always very nervous about the next one. When I tell you tax receipts are too low, because I'm often accused of advocating a flat tax for the sole purpose of pleasing the taxpayer. Nothing could be further from the truth. Fundamentally, we have got a colossal mismatch between receipts and expenditures. And the only way I know of to close that is either curtail spending, which is proving to be very hard, or to reform it, rearrange the whole tax system. So through that higher incentives, we get stronger growth and better revenue. Putting a surcharge on or some other system is and would be self-defeating. Last but not least, there's one other problem with the tax code, which I don't want to forget. When we passed the income tax amendment back in 1913, we were told it would raise revenue. But in the last 50 years, we've lost sight of that fact. Not only is the income tax a cure for raising revenue, it also contains within it a whole host of hundreds of social policies and objectives it is intended to reach by providing preferential tax treatment. We have something called loopholes. They consist of credits, exemptions, exclusions, deductions. There's 400 of them. I don't know why we call them loopholes. Armies of lawyers have worked long and hard to get them in place and retain them. They are designed to achieve a whole, by the way, there's more lawyers in Washington than New York City, and the population is not equal. And none of them are litigating law in the conventional sense. They're all in the Capitol lobby. We have all these loopholes, and they're intended to attain social objectives. But it turns out you can't use the tax code to raise revenue if you're at the same time going to use it to achieve goals of social policy. So I wanted to go from that to this awful complex system to give you a little bit of a personal biography before addressing what I regard as reasonable and serious prospects for tax reform. I had the good fortune to be in California on June 6, 1978, when Proposition 13 broke out of the starting gates. It was one of these overwhelming, ground-shaking movements, and I think quite rightly it earned the label taxquake. It was an earthquake of tax-reducing proportions. I watched it, and I enjoyed very much watching the legislature, special interest groups, the politicians, the banks, the unions, the professors. Everyone opposed it, but the people passed it by landslide proportions. And of course, it set off a nationwide tax revolt that lasted several years at the state and local level. And I think as Ronald Reagan campaigned all through his election year, it was quite clear that tax cutting was a major issue and came to take a central place in the platform of both parties, in fact. After all, even Jimmy Carter said that the tax system was a disgrace to the human race, and I don't think any of us have changed our opinions of that description of the tax code. We've had in this country tax reform that's as old as the country itself. We've had tax rebellions that are as old as the country itself. In fact, I think the single most important event in the history of the United States was the dumping of several shiploads of tea in into the harbor. And the tax rate, you will be happy to know, was thruppence in the pound. For those of you who know your pound, shilling, halfpence, and farthing, that comes out to a tax rate of 1.25%. So the country fundamentally revolted against the crown for a tax rate of about 1%. So today you see just how easily you acquiesce in high tax rates. Well, just go back to recent history since 1954, when we completely recodified the income tax. We had major reforms in 64 and 69, 71, 76, 77, and 78. We had a major tax measure in 1981. We had another one in 1982. For those of you who like the fine print, the text by the Joint Committee on Taxation of Congress for the 1981 Act came to 400 pages alone, which is why armies of tax lawyers find tax change very, very profitable. Well, having watched Proposition 13 and having written a book about it, coming to the conclusion by and large that its effects on the economy were beneficial, its harm on public services negligible to non-existent, and my welfare as a homeowner greatly improved, I got very much interested in the question of federal taxation. And fortunately, Ronald Reagan has been an honorary fellow of the Hoover Institution since 1975. He has his archives there. And I was asked to serve on his tax policy task force. It consisted of 12 people, 6 from the Treasury and past administrations who had the curious notion that the important role of the Treasury is to collect as much of the citizens' money as it can. And 6 of us economists, political scientists, who had a different view, which is the purpose of the tax system is to take as little out of the pockets of the people as is consistent with meeting the minimum amount of essential tasks of government. So we already had an internal division. Fortunately, this didn't affect our recommendations at all, because Ronald Reagan had gone on record as favoring the Kemp Broad 30% across the board tax rate reductions, which we of course ratified, a speeded up business depreciation schedule, which we ratified, and we came up with a 400-page, in fact, of the 48 task forces, we had the biggest, the best, and the most on time. However, just because we produced a 400-page volume didn't mean that the Congress of the United States was going to summarily adopt it. And I must say, within about 2 months of President Reagan taking office, already it was clear that compromise was the order of the day. And before you knew it, 30% across the board became 25% across the board. The January 1 date of implementation became October 1. Coupled with the Social Security tax, the oil excise tax, taxation increases due to higher inflation, the projections were that by 1984, if I may borrow some economics jargon here, marginal tax rates on real income would be where they were in 1980. In other words, there would have been no tax rate reduction for the ordinary American, because all the cuts he would have produced would have been offset by automatic built-in increases. And if you check your annual budget, you'll see we're collecting about the same share of national income and taxes as we collected 3 years ago. Well, I was a little bit disappointed then, and I thought there had to be a better way to deal with the tax system, and I proposed that we consider something on the order of a low, simple, flat rate tax. I wrote a piece on this in the Wall Street Journal with a colleague, tried our hands free from Washington at designing a system, did another piece in the Wall Street Journal, and lo and behold, we got a flood of letters and phone calls and correspondence and a great deal of interest. And I took this to mean that the country movement. And then came April 15th, and I assumed we were through for another year, pack our bags, come back in January. And lo and behold, that year, 1982, April 15th, the Wall Street Journal, the Washington Post, the New York Times, the Christian Science Monitor, all endorsed it on their editorial pages. There was a flood of legislation introduced. The movement picked up a head of steam, and there was phenomenal interest. If you were in Washington between June and September of 1982, at any social gathering, the single most talked about issue in the entire country was the flat tax. As much as virtually every other domestic and foreign policy issue put together. I had the good fortune to testify before two congressional committees, and I even reasoned that this movement would grow to such colossal proportions that we rushed home from one set of hearings, wrote a book, arranged to get it published in January, only to find the day after the book came out, the movement died, and my royalties collapsed. Now, the disappointing thing about this is in Chapter 8 of the book, it's subtitled, Why the Flat Tax Will Come About, How to Make It Succeed, and I have built into my model the steamroller effect which will sweep away all the opposition. The next edition is going to have Chapter 8 deleted. Now, part of the problem is since I am a political scientist by training, I need to know where I went wrong. How did I let my euphoric emotions carry me away from objective, dispassionate analysis? Why did I think simply that a good idea, explained in clear and simple terms, to intelligent people would get them to do the right things? I'd forgotten about the rats and bubonic plague. One of the most interesting things you could possibly do in reviewing textbooks for American politics courses is to look down the table of contents. Everyone's exactly the same. Public opinion, elections, parties, the presidency, the courts, the Congress, the agencies. They're all wrong. Virtually every textbook on American politics is wrong in the sense that it conveys to students that power lies in something we call the federal triangle. Up on the hill is one end of it. Down at the other end is Constitution Avenue with all the executive branch agencies. At the other end of the triangle is the White House. And you draw that triangle and you end up with what is in the textbook the source of American power. It ain't so. There's no power there. All the power is associated on K Street. It's a lovely street. It runs from about 22nd to 14th. And it's home to 1,500 registered lobbying organizations that do nothing but petition the Congress to sustain some 400 loopholes in the tax code, or a bevy of spending policies, or a host of regulations that benefit their particular constituents. We replaced what used to be known as the Federal Triangle with the Iron Triangle. The Iron Triangle is interest groups with their constituents, the bureaucrats who implement them, and the Congress that enacts them. Congressmen are conflicts with these days, protecting clients' interests, constituents against laws they themselves pass. So, I had completely forgotten all about pressure group politics. I had lost sight of K Street. I never lose sight of K Street anymore. It's like the famous New Yorker poster which shows Manhattan from 5th Street to 7th Street as 80% of the poster and the whole rest of us out there, wherever we are, as the rest of the United States. The proper poster for the American political process would show 80% of the K Street, 10% of the Federal Triangle, and 10% of the electorate. All power lies in the hands of lawyers in K Street. It's very salutary to walk down the offices looking at the roster of companies and realize that all those lawyers and all those expensive people do nothing but in effect raise regulations, taxes, and federal spending. It's a classic case of special interest groups who defeat the general interest. And so long as we have a political process in which we deal with issues one at a time, tax measures one at a time, the individual citizen, the individual taxpayer, is no match whatsoever for the concentrated benefits that accrue to any one group that is successfully able to get a piece of legislation or a special favor. To give you an illustration, all that we need to do is get a slight tariff on Mexican tomatoes, which would cost every one of you in this room maybe 10 or 15 cents a year by banning the import of Mexican tomatoes. But such a ban is worth millions of dollars to the producers of domestic tomatoes. And so none of you have any stake or any time. You're not even going to spend a 20-cent postage stamp to defeat that measure. But if you're in the tomato growing business in this country, you'll spend millions of dollars. And so our entire tax code, our entire governmental setup places political power in the hands of K Street. In which case, I realized in retrospect that I let my own euphoria carry me away. And by carrying me away, caused me to write a book after the fact instead of before the fact, which I will no longer do. Well, I went from being an active, enthusiastic participant in trying to lead a tax reform movement to a political analyst which uncovered the folly of my ways. And with that background, I'm going to dare to do a little bit of political prophecy here. I genuinely believe that we are going to get serious tax reform in the near future. It's not because the President said in January 1983 in the State of the Union message he wants to study for major reform. He said that again a few weeks ago. It's not because he said the Treasury is going to report to him some serious proposals. And it's not because one of my colleagues from the Hoover Institution is director of the Office of Tax Policy. I think there's a series of fundamental underlying changes and movements which is going to leave me with some confidence to forecast a major fundamental overhaul and reform of the system. If not in the next year or two, sometime between 1987 and 1989. And while a good deal of ruin may have already been done, better late than never, but I'm not going to euphorically predict something that won't occur this year or next year. Let me give you some fundamental reasons and some major factors at work in the American economy and society which lead me confidently to believe that there's going to be a major overhaul of the tax code. I'll tell you what the best candidates are and what the features they will have as a result. First one relates back to my opening remarks. There is increasing anger and hostility over the current tax code. I speak to dozens of groups, and I have discovered over the last few years that one thing that drives people to exasperation is trying to fill out their Form 1040 by April 15th. And I'm here talking about people who want to do it honestly. It is simply not possible to keep track of that part of your home mortgage interest repairs and furnace repair attributable to your Schedule C and put the balance over to Schedule A or Form 1 and keep those numbers right. Even if you try to do it right, it's very hard to get it right. This is what has led people to spend a huge fortune in trying to get commercial help. As a result, I see a day when April 15th will come, and all those postal clerks who've been put on overtime, who are waiting outside the post offices of all the major cities with their open envelope bags, so as to postmark the return before the close of business on April 15th, will wait, and no one will show up. And no one will throw their envelopes in the bag, because the people will refuse to file this income tax. I'm not equating a tax revolt with opposition to taxes in general. I am equating it, however, with the forms people have to go through to file this present tax. So I've said some $20 to $30 billion a year in compliance costs are imposed on taxpayers. The tax shelter business drains several $100 billion away from productive activity and investment that can create jobs, growth, and higher living standards. I have watched Internal Revenue Service regional directors boast with glee about the expansion of funds and staff for enforcement. And we face in the not-distant future a super police agency to monitor compliance with the present code as the present amount of disinterest in compliance with the code grows. I want to refer to a second trend, and I hesitate to do this because it's casts a blot on the character of the American people. But I report what I see. And that is, there is a phenomenal increase in cheating. This increase in cheating goes hand in hand with, by the way, the fact that no longer is it disrespectful, almost becoming a badge of honor. I find people who regard looking for every conceivable loophole, every conceivable angle, every conceivable way to lower their tax bill, from what is legitimate tax avoidance to the gray line of tax evasion, becoming normal, acceptable practice. We still don't drive through red lights in the middle of the night, even when nobody's watching. But we're now beginning to drive through the red lines of the tax code, even with people watching. The legal tax gap with the IRS, as I've said, is in the $100 billion plus neighborhood. So much so that all by itself, eliminating that legal sector tax gap would be tantamount to getting us so far down the road to a balanced budget that the word deficit would disappear from our political vocabulary. The evidence produced by the Internal Revenue Service itself shows that every year the proportion of total income which is earned by the American people is underreported with just a little bit additional amounts. And as we continue to withhold more and more of that income from reporting, as more and more of it join the underground economy, this trend will increase. For the last few years, the greatest number of dollar bills have been issued in denominations of $100. Used to be ones. For a long time, it was 20s. The Treasury prints more $100 bills every year than it prints $20 bills. And how many of you see $100 bills in your daily usage? That's how we finance an underground economy. Cash means no receipts. Lack of receipts and cash means no taxes. And the effect over the years of complexity, costs, and high marginal rates have made more and more formally honest, obedient, and compliant taxpayers. Because 10 years ago, you never heard about a legal sector tax gap. You never heard about failure of compliance. If you read the Wall Street Journal every day, once a week, you will see a tax shelter fraud case in the neighborhood of $100 million. Genuinely, it's an epidemic proportions. Now, I want to go from here back to the deficit for a minute. It's the structural deficit. We hear talk about the structural deficit. That fundamentally the federal government's committed to a course of spending beyond which tax receipts will ever catch up. It has gotten to the point where no serious scholar of public finance believes that it would be possible to raise enough extra money through a surcharge, through an excise tax, through a windfall oil tax, through any kind of tax. The only way it will be possible to raise sufficient revenue to run the government is through a complete overhaul and replacement of the existing tax. One that would stop the erosion of the underground economy. One that would extend the tax base sufficiently so that we recapture all that income for taxation that now escapes it. One that would bring about substantially lower rates so people don't have an incentive to purchase shelters or to cheat or to underreport their income. All of these things, the pressure for revenue, the need for simplicity, a quiet but growing public revolt, and a great anxiety that the whole system will collapse and our tradition of voluntary assessment will break down, is going to compel the Congress at some point, the President with it, to do away with tinkering with our tax code every year like a Christmas tree, adding and taking off another adornment and replacing it and scrap it. Having said that, and guessing maybe that 1987, 1988, 1989, somewhere in there is going to be the moment, you might want to know what we're going to get. So let me tell you what I think we're going to get, what I would prefer to get. Most economists increasingly agree we need a tax system that stimulates investment. And you hear talk of a consumption tax. And a consumption tax that exempts from taxation savings. Since the bulk of all savings in this country is done from business spending, business investment, which is how we get new jobs and growth, a consumption tax is what we're likely to see. And I think it should take the form of a uniform low flat rate. The two postal cards in front of you, the tax system I've helped design, drawn up the form, are precisely a low flat rate tax on consumption. I brought some giant postcards along for those of you who don't see very well at close distance because you're farsighted. But if you pick up your postcard, note line 2C, you will see it says, allowable cost purchases of capital equipment, structures, and land. A key feature in our tax system is 100% expensing of all business investment. Forget depreciation, forget all those hodgepodge of schedules. You buy a $150 million factory, you write off $150 million. It's that simple. No difference between a screwdriver and a factory. You expense it right off the top. This is an investment-oriented tax code that will produce a much higher rate of investment than the current code, in which you're never sure if your depreciation schedule will recapture the true economic value of your assets. This particular system we designed could be filled out in 5 minutes at 11:55 at night on April 14th. You sit down and fill it out. Put down your income, take off your exemptions, your business expenses, net out the difference, multiply by 90%. If you had enough withheld, terrific. If not, you either get some back or send some more in. Same thing's true with General Motors. They could just fire tens of thousands of people. I know you're going to ask me, what about the unemployment compensation from all the lawyers and accountants? Fundamentally, they're all smart people. They'll find their way through the thicket of unemployment and come up with something useful and productive. I presume the laughter are all those who are looking for work already. In our particular code, we don't tax capital gains. We pay interest and dividends on an after-tax basis, so there's no place on those forms to declare your interest income or deduct your interest payments. We integrate the corporate tax with the individual tax and stop the abusive process of double taxation, which absolutely distorts the incentive for people to invest in business activity. By abolishing the capital gains tax, we solve all problems of risk venture capital formation. We also solve, in another fundamental way, double taxation. Well, there's more than one way to skin a consumption tax cat. The way we've done it is through a very simple form, 2 postcards, tax business and source. Another one you hear about is constantly referred to by the chairman of the Council of Economic Advisors, Professor Martin Feldstein, and we never know when he's going to be back at Harvard from the Daily News. But in any case, Professor Feldstein proposes using the current income tax code and simply add some lines. Deductions for savings and additions for money drawn from savings. And in that way, people can consume what they like and pay taxes on it, save what they like, be exempt from taxes. I find, quite frankly, this system less attractive than ours because he still has to use dozens and dozens of forms. It doesn't solve the problem of simplification. It only solves the problem of encouraging sex. We could go to a national sales tax. That would be a third kind. We have state sales taxes. We can do a national sales tax of some odd percent, which would raise the appropriate billions of dollars. A number of economists propose Congress would be somewhat leery of moving in that direction, lest the public perceive it as being an addition to the current complicated code, rather than a replacement for the current complicated code. No one has yet accused me of advocating a flat tax on top of the existing tax. Then there's talk about a value-added tax. Whenever you all go to Europe, you discover these astounding 22% taxes on everything you buy, which is this monumental built-in value-added tax that seems to just mount up from nowhere and convert a $30 restaurant bill before you know for $50, $60, $70. You can structure flat taxes in a variety of ways. They can range from below 11% on all income to as high as our 19% by exempting business investment and having a strong, substantial personal allowance. But I think the important point is that whatever tax reform we go through is going to have a lower rate and a broader base. Now, I want to make one particular sales pitch here before you go out and urge your congressman to adopt the wrong kind of flat tax. There are in the principles of public finance a series of considerations taught to every introductory student. There are the principles of efficiency and equity. And efficiency means that a tax system shouldn't distort the economy. And equity means people should pay some fair share. Whether it's vertical equity, the rich should pay more, or horizontal equity, people in the same classes should pay the same amount. But I want to introduce a new criterion which is not found in any textbook on public finance, and I regard as the overriding criterion, and that's simplicity. By Rubuska's rule of taxation, any tax reform must produce a tax return that fits on the side of a postcard. And the reason it has to fit on the side of a postcard is because there's only 12 lines on the side of a postcard. But if you just take your normal 1040, it has 72 lines. And the amount of damage that can be done to the economy through 72 lines of exclusions and credits and deductions is incalculable. So by ruthless insistence on this size postcard and print no smaller than this, you absolutely guarantee that the Senate Committee of Finance and the House Appropriations Committee will go out of business. And their only decision, should they have one, would be to set an appropriate rate of tax, not to exceed my sacrosanct level of 20% in any instance. I've got to now give you some dates and the sequence of events. We're going to get, I hope, to a pure flat tax by going a route which may look somewhat queasy in the first instance, but isn't all that bad. There's a lot of talk about a fair tax. Senator Bradley and Congressman Gephardt proposed a tax with just 3 brackets and a broader base. I think with some appropriate modifications, the Congress may find that's a fair way to go. But if we take that first step, we'll find the benefits to our economy from having a broader base and a lower rate. We'll lead more and more members of the public and Congress to conclude that the broadest possible base and the lowest possible single rate would be the best way yet. So I think we can get from here to there in a series of steps, and therefore in my case, it's not all or nothing. When will it occur? Presidential politics needs no reform this year. 1985, what will President Reagan do, assuming he's reelected, with the study given to him? Suggest that while the economy is pretty healthy, we don't do anything to upset the recovery. And before you know it, by June of 85, we'll be facing the congressional elections of 86. And so I think 1987, we may be in enough of a mess between the economy, the deficit, and everything else, that under sheer threat of crisis, the Congress will move. And they will move quickly. And so I'm predicting September 17, 1987, so that we can celebrate the 200th anniversary of the Constitution with a tax bill that hopefully has my name on it. Thank you.